Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to be taking a look at the Forex market wrap. I'm going to highlight what happened in the news this week and some of the charts of interest. So, heavy news week this week. We've had a lot of central banks speaking. We had an RBA rate announcement, we had the Bank of England rate announcement, we had an ECB rate announcement and non-farm payroll. So a lot of high impact data this week. Now, the RBA went first. They left rates unchanged at 0.1%, but they were basically saying that they are ready to hike rates soon, as obviously globally the inflation rate is rising. So they want to try and have an effect there on the rise in inflation. They're going to do that by hiking interest rates. That's a tool that they can use to try and bring that inflation down. So there was a fairly positive outcome there from the RBA. We then had the Bank of England and the forecast of a 0.5% interest rate was in fact met, and we saw them rise those interest rates from 0.25% to 0.5%. Again, the pound was quite bullish from this initially, hit a key resistance level around about that 136, and we did start to see a little bit of selling after that. However, Bank of England still looking to hike rates further. We then had ECB. They left rates unchanged, and the ECB previously acted a little bit differently from all the other central banks. In the previous meeting before this one, they wanted to leave rates unchanged and wanted to remain fairly flexible due to the kind of situation they had with rising cases of Omicron in Europe. So they wanted to remain fairly flexible. And the same happened again, really. The ECB have turned around and said that they're not looking to hike interest rates until their stimulus or their tapering ends. Now, at the moment, that could be for some time yet. So they're staying fairly neutral at the moment. We then had non-farm payroll today. We had the average hourly earnings up, which is what Powell actually talked about previously, and he said that the jobs data was going to be fairly decent, and this is a decent number. You've got a revision to 510,000 jobs. It was forecast to be 110, came out at 467,000, so that's quite a strong jobs number there. Average hourly wages increased as well, so basically what it's telling us is that out of these jobs created, they were of a higher wage, so a better quality of job. The only downside to the report was a slight increase to the unemployment rate. Now, the unemployment rate has fell quite a few times recently. However, this is now a little bit of a rise in the unemployment rate, but still not actually bad data out of the US, and we did see a short-term spike in the US dollar. However, if we go to the US dollar index, we can see that we've pretty much reversed last week's price action. We traded above $97, which was an area where we were talking about. We were looking for price to head towards this $97 area. However, what we were looking at was, can price sustain above that level, and if not, what will happen next? And what we've seen is price has fallen to the downside. We're actually expecting a little bit of buying to come in around this area at 96.20, but that didn't happen. Price continued to trade to the downside. And that's looking like a very bearish move right now. It's looking like, now that we've engulfed sort of last week's price action, can we now trade back down even lower to sort of 94.55? So really interesting what's going on here with the US dollar, considering the fact that the FOMC are fairly hawkish, fairly positive. We've seen that drop. And the reason investors are kind of selling the US dollar at the moment is basically off the news that the FOMC are not going to hike rates as aggressively as what they first said. So they kind of outlined that the first one could be around about a 50 basis points jump. They've turned around and said that's not likely, and investors have sold off. So is that almost a little bit of a back down from the FOMC, and that could put a little bit of fear in investors, thinking that, oh, maybe they won't hike rates as aggressively in the future. So that's why we've seen that dollar downside. Obviously then that sparked a nice euro break to the upside. We did talk about the potential for euro to pull back. We started to then create higher highs and higher lows. Price entered the demand zone after the ECB news, and price has then shot to the upside and now is trading above that key 114 level. So it looks like we're going to see some further upside to euro US dollar as well. Kiwi was one to watch for us this week. On our strength meter, it suggested that the Kiwi was still weak, however in a reversal zone. So in the week ahead analysis, we'll check out Kiwi, but you can see here that despite that US dollar weakness, Kiwi has technically remained a little bit bearish. Although it's a bullish close on the weekly, we did come up into this resistance level where in a previous video we said we could start to see some selling coming back into the market, and so it may only be a short term little bit of downside there, but sellers are still active on Kiwi at the moment. We want to see that price trade above sort of 0.67 in order to really start being a buyer of this on a reversal situation. But we'll talk about that in more detail on the week ahead analysis video. Finally then, the pound. So obviously Bank of England hiked those rates. What we saw was a pretty positive move initially. We highlighted previously that 136 was a level of interest. There was actually a higher level just through here, around about 136.24, which was a high volume level on volume profile charts if you use volume profile. And that was where a lot of selling had come from in the past. Price hit that, and we've been pretty bearish ever since, trading back towards this 135 level. So be interesting to see how the pound shapes up. At the moment it's looking like a higher low here on the weekly. If price is going to form a higher low, what we could see is this market start to turn again and drive back towards sort of 137. So keep an eye on that one as well. If the dollar's going to get weaker, I would think that the pound US dollar price would continue to rise. So lots of changes of trends recently, lots of reversals setting up. We'll just have to see if those follow through. So hope you enjoyed the content this week. If you did, leave this video a thumbs up. Subscribe to the YouTube channel to see some more of our Forex trading content, and I hope you have a great weekend. Cheers.